Palantir stock breaks $40 a share during trading today. PayPal is flirting with 80, and SoFi is up a massive roughly 7% on the day. I want to talk about those three stocks. I've made a lot of videos about those three stocks over the past year or year and a half. So I just wanted to update everyone on those three stocks and just chat about them, what my current plan with each one of those stocks is. That's what we're going to get into in this video. I'm super excited to get into it. If you're new here, I'm Austin. I'm a co-owner of cloudmusicsuite.com. I'm also a stock market investor, and I have a large position with all three of those companies that I mentioned. Palantir is the biggest of those three, SoFi is the second biggest of those three, and then PayPal is the smallest of those three. Real quick, if you're not subscribed already, go ahead and click that subscribe button and scroll down to the comments section. Let me know if you own any of these three stocks, and if you're willing to share, what percentage are you up on these stocks, or what percentage are you down on these stocks? I want to hear that in the comments below. Excited to see what you guys have to say down there. All right, let's jump into the video. I want to start off with Palantir, okay? Palantir is a company that I've been talking about on this channel pretty much since I started my YouTube channel a few years back. Very, very large position for me. Now that it's run so much, it's actually the #1 position in my entire portfolio. And of the stocks I currently own, it's now the second largest percent gainer behind Tesla. Tesla's still holding that top spot for largest percent gain in my accounts, but Palantir's got the #2 spot now. So I want to talk about why Palantir is running so much. There's a lot of reasons. One of those reasons is that the positive flywheel is starting to happen with their commercial business. We've seen it over multiple quarters now, and Wall Street's just coming in and agreeing with us, all those people who were buying shares multiple years ago, multiple quarters ago, who are up hundreds of percent right now. Wall Street's putting their money behind the stock now because they see what we see. They were just late to the story. Palantir's got more and more executives talking about the product every single day, and the best person that can sell an executive of a large company is a different executive of a different large company. These guys talk, and they talk about how Palantir is saving them X amount of dollars and making them this much more efficient. Whenever one company can share that experience, another company is much more likely to use that rather than just Palantir cold pitching them. And honestly, that positive flywheel effect is really just getting started. And then there was a key change they made in their business model about a year back, and it was the boot camps. Rather than having a very long sales cycle, they can take you from zero to deployment and actually using the product inside of your business within 5 days' time. All of those fundamental changes and the fact that Palantir's revenue is now re-accelerating. It looks like it's going to be in the high 20s or low 30s and maybe even beyond that for quite a while. That remains to be seen, but that's what it's looking like right now when we look at the trends. This is after we had a very steep decline in the revenue growth rates. Now, like I said, they're climbing back and we have re-accelerating revenue growth, expanding margins, cash flow machine, amazing balance sheet. Palantir's really got it all right now, and they have that AI hype behind them. So what's the valuation look like? Am I looking to pick up more shares of Palantir right now? No, I haven't picked up more shares since mid-2023. I have been sitting on my shares, relaxing, chilling. I was in aggressive buy mode from somewhere around mid-2022 until mid-2023. I accumulated a ridiculous amount of shares, and it has paid off in a massive way. But like I said, I have not bought since mid-2023. That's over a year ago. The reason I haven't bought is because I don't like the valuation anymore, especially not right now. Check out the valuation right now. GAAP price to earnings ratio on a trailing 12-month basis, 231. GAAP PE on a forward basis, 211. Certainly not a deep value stock, right? It will be extremely rare for me to actually buy a stock that has a 200 PE multiple. That is extremely nosebleed high. I'm not going to be buying new shares, but I'm okay with holding my Palantir shares, because I believe over the next 5 to 10 years, Palantir is going to turn into a much bigger beast, and they have so much growth ahead that I'm not interested in selling right now. Just because I'm not interested in buying doesn't mean I'm selling. I'm cool with holding my shares. Using Tesla as an example, it's been like 5 years since I bought a Tesla share. I'm sitting on crazy gains, haven't sold a share in a very, very, very long time. There's no reason for me to. There were times where I felt like the PE was ridiculous on Tesla. I would have sold Tesla shares every single time I felt like the PE got stretched too much. I wouldn't hold any shares right now, and I wouldn't be sitting on the gains that I'm sitting on in Tesla stock. I see this Palantir situation very similarly. Yes, I believe the company's overvalued right now, and that valuation has been stretched like crazy, but that doesn't mean I'm selling shares. I'm going to hold 100% of my shares, but also I'm not going to be buying any shares anytime soon. I'm just going to relax, enjoy the gains. I love opening up my account and seeing, oh, Palantir's up again. Palantir's up again. It just can't be stopped. It's been a really fun stock to hold, and I can't wait to see what happens over the next 5 to 10 years with Palantir. All right, next stock I want to talk about here is PayPal. And PayPal is a stock that's up about 23% in the last 6 months. This is such a controversial stock, or at least it was about 6 to 12 months ago. I started making PayPal videos when I was buying the stock, somewhere in the mid 60 range. I kept buying all the way down to the mid 50s range, and that's made my average cost somewhere around $60 a share for PayPal. So many of my videos that I would post, people would say, PayPal's a trash company, PayPal's a trash stock, they're going bankrupt, etc., so forth. The stock's going to 20, the stock's going to 10. I saw these comments like crazy, and everyone was saying this is a value trap. Yes, it was undervalued. Not everything that's undervalued is a value trap, though. That's just like a buzzword people like to throw out. Any stock that someone doesn't like, or any company that someone doesn't like that is on a downtrend, they love to throw out the words, hey, it's a value trap. I totally disagree that PayPal's a value trap, and I honestly think the move that we're seeing in PayPal is way overdue. To be honest, I think Alex Chris is doing a very good job, and the fundamentals of the company have been in a nice spot for quite a few quarters now, and now we're starting to see the stock price catch up to that. They've got some young blood over there, they've got some innovation over there, and they're trying to diversify away from the legacy PayPal business, which brings a lot of the profit to the company, the majority of the profit to the company, that is. And for a company like PayPal, which is such a global player and such an established company, a little bit of innovation is going to go a long way for this company. But even outside of that innovation, when I saw the stock trading at an 11 trailing PE and a 9 forward PE, while it still had about 9% year-over-year revenue growth and about 20% year-over-year net income growth very consistently quarter in and quarter out, I thought, man, this stock is a deal. I have to own these shares. This is undervalued, and this is going to be a nice turnaround for me, and I'm going to get great appreciation on my shares. I don't even think the story is played out yet. Yes, it's gone up 23% in the past 6 months, but I do see PayPal breaking into 80, breaking into 90, and actually not soon, but over the next 6 to 12 months, breaking back past that $100 mark. If I didn't have a PayPal position already, I would definitely be okay with opening a position around this $75 to $80 range. Of course, I wouldn't go all in at one time. I would slowly buy very disciplined amounts of shares over a long period of time, just in case the stock does fall anymore. I would be able to lower my cost basis. By the way, that's exactly what happened with me. I was buying around $65. I ended up bringing my cost basis all the way down to like $60 because the stock had dropped after I had bought my initial shares. If I would have gone all in and bought all the shares I wanted to own in one day or in 2 days, I wouldn't have been able to take advantage of the stock having dropped a little bit, and I wouldn't have been able to pull my cost basis down. Definitely a pro tip to anyone out there: buy over a few months span, sometimes 6 months, sometimes 12 months even. It depends on the stock, of course. All right, now the last stock I want to talk about is SoFi. SoFi was up about 7% on the day as of recording this video, and we've got a little bit of momentum starting to build around SoFi. Stock price is sitting about $8.40, and we've really been stuck in that $7 to $8 range for a very long time with SoFi. A lot of SoFi investors are getting very fed up. I see it here on YouTube in the comment sections. If I make a SoFi video that's a positive video, I'm excited about the stock, people are saying this is a trash company, I'm bag holding, I've been holding this bag for way too long, I'm selling. I've seen many comments just like that. Investors are starting to get frustrated. One thing that might be helping SoFi get a little bit of momentum behind it, though, is those rate cuts. We know that the Fed started their rate cutting cycle. They did an emergency cut of 0.5. And any stock that's rate sensitive, someone like PayPal that we talked about a little bit ago, and someone like SoFi, who actually gets the majority of their revenue and the majority of their profit from their lending segment right now, they're definitely going to benefit from lower rates so they can get more originations. SoFi is a big origination company, and then they can sell those loans in the secondary market. The easier money is to get, the lower those interest rates, the more people are going to take out loans. It's a very simple concept, but it's going to help SoFi. As rates come down more and more, lending's going to ramp up even more. That has been a flat spot in their business. Lending revenue has actually been down a little bit on a year-over-year basis for a few quarters in a row now. So I don't think it should be surprising to anyone that SoFi hasn't been able to take off in a massive way just yet. Whenever a company has their largest business segment shrinking in revenue, that's not a good look. That's not something Wall Street wants to get behind. It doesn't really matter how much growth there is in those other two segments, which, by the way, the growth in the other two segments is very respectable. Tech platforms somewhere near 20%, 20%, and we've had financial services revenue increases of somewhere between 40 and all the way up to 70% increases in the revenue from the financial services segment, which is obviously completely ridiculous, but that hasn't caused the stock price to move up because the largest business segment has been down on a year-over-year basis. So yes, there's a ton of growth with SoFi. There's a big, massive, bright future in front of SoFi, and that makes a good opportunity for investors. Whenever Wall Street says, yeah, I don't want you right now, I'll put my money in you later, because of something like the largest business segment having a decrease in revenue, while we can see over here, they've got two other business segments that are growing very, very respectably and bringing in more and more revenue and more profit every single quarter. We can take advantage of Wall Street not wanting to put their money in the stock just yet, and then not only are we going to get the growth of these two segments and we're going to get the stock at a lower price, but now we've got rates coming down and those lending revenues are about to rise massively, and that's going to bring a lot more profit to SoFi. So we're going to see EPS trending in a very, very positive direction. Well, I think it's a great situation for retail investors whenever Wall Street is saying, yeah, I don't want a piece of that stock right now, especially when we've got two of the three business segments growing like crazy. Just because the one business segment over here is not growing, Wall Street doesn't want the stock. That presents a great opportunity to investors to pick up shares, because we see that as rates come down, revenue is going to rise from lending. When revenue rises from lending, Wall Street's going to be happy about the stock again. It's not like financial services revenue and tech platform revenue are going to fall off a cliff while lending revenue rises. They're just going to bring that back up, and the other two segments are still going to be going absolute beast mode. So it's about to be a very bright back half of 2024 and all of 2025 for SoFi, assuming the Fed keeps on their cutting cycle. SoFi is still one of my highest conviction plays in my entire portfolio. Just because the stock hasn't been moving because Wall Street hasn't put their money in the stock yet, that hasn't made my confidence decrease at all. It means nothing to my personal confidence about SoFi. Anthony Onoda, the CEO of SoFi, has strung together such an impressive string of beats and amazing quarters that I am very, very happy as a shareholder. Nothing around the sentiment around SoFi, nothing that Wall Street thinks about SoFi, nothing that the stock price does is going to shake my personal sentiment. What's going to change my personal sentiment is if the fundamentals get better, I get more bullish. If the fundamentals get worse, I get less bullish. That's it. Other than that, I'm just holding and I'm a happy shareholder. If the stock drops back into the 7s, I'm going to buy again. If it stays in the 8s, I'm probably going to chill out and not buy. But I've got a massive position already. If I don't get to pick up any more shares, I'm very happy with my allocation. I'm extremely excited to see what Anthony Onoda can do with this company and what's going to happen subsequently to the stock price over the next many years. I plan on holding this stock for at least 5 more years, but probably way more than that. Like I said at the beginning of the video, I want to know if you own any of these 3 stocks. And if you're comfortable sharing, let us know how much you're up on a percentage basis or down on a percentage basis in any of these 3 companies, and what your average cost is for each one of these stocks, if you do own them. And if you don't own these stocks, let us know if you're looking to buy any of these stocks. And if you are, what's your price range that you would be happy picking up shares with for each one of these 3 companies? I'm excited to see your comments down there. Definitely one of my favorite parts of posting here on YouTube is having some conversation with you guys down there. I appreciate you being here in a major way. Thank you so much. Have an amazing day.